Hello everyone, this is Arura, and in this video I'm going to talk about the different strategies for day trading. I will show you three strategies in this video that you can use for Forex, cryptocurrencies, commodities, or stock markets, no matter in which one of them. These strategies and the markets that I'm showing you are there just as an example. So for more detail, look at these strategies and let me know if you have any questions. Then based on your questions, I will answer your questions under the comments under the videos. Or if you like any of these strategies, write me which one is more interested for you. So I will make more videos about that specific strategy with more detail. Let's go to the chart. Here is one example. One of the most used indicators for day trading is the Bollinger Bands, and which you can mix it with the MACD. With the MACD here, what we are using usually dip. This is how I use that actually. How I can explain it and how I'm using for my own. With the MACD here, it's a standard and simple MACD. You don't need to complicate it for yourself. You can see here the MACD after a sharp downward that here we had. After that, the euro used started in uptrend in a daily chart. In H1 chart. If you go to the daily chart, things will be different for sure. But when we are talking about the day trade, it's about on the H1 chart or in the 30 minutes chart. So when we are talking about H1 chart, day trading, it's about H1 and 30 minutes charts. We better go to the H1 and analyze the market with that. So it's 1, 2, 3. It's 4 days right now from March 9 that euro used started in uptrend. We can see here in the MACD. Today things is a little bit going to change. So why we can understand it. So look, we can see that histograms histograms from under the zero level is getting above that, and the MACD line, signal line, also is getting above this histograms. At the same time, the price went above the 20 moving average, simple moving average, which is the middle line of Bollinger Bands. Overall, we can see that the market is uptrend. When we can buy it, when the price is getting closer or breaching the middle line. Here is a 20 moving average. So when the price is getting here, it's an uptrend. You can understood here also. So these levels could be the buy level, and exit market could be here, or you can put it just like stop loss for yourself. You can put the exit. Look, if you can see here the chart. Here is the ones to go to the history to find out which level you can exit. You can put your take profit level. When we are going up an uptrend, so usually market is going to cover this sharp fall that we had. So our first exit level could be somewhere here, So when we are buying, we can put the take profit here in the day trading. Based on that, so one, and also we can put our stop loss somewhere under this level, somewhere here. For example, we can go, okay, this could be the stop loss a little bit under that. So this is the day trading, how we can use it. And again here, still we are uptrend, and when we can buy here, when we have the price under 20 moving average, 20 period moving average here, or somewhere around that. Again, take profit. If we go to find another important level here. So it's the moving average when you're buying. As this day, okay, here. Again, we can buy. Okay. When we go, look, this is the important level again we had before. So when we buy here, let's go. When we buy here. Smaller. When we buy here, our take profit could be somewhere around this level, which is currently also a higher band of the Bollinger Band. Our stop loss also could be somewhere a little bit under this level. So again, this is the opportunity price when the price is falling down under the 20 moving average, and when starting again getting above this level, we can buy. So this is one strategy, but when it comes today, When it comes today, we can see that if we want to trade today, it's a Euro USD chart. When we want to trade it today, we can see that it's under this level, and the MACD signal line is breaching the histograms from up to down. So it means that right now it's a good time. It's not a good time to buy, but the downtrend also is not confirmed. So it's better if we don't buy and if we don't sell and wait to see what will be this. If this price started to go up and cross this 20 moving average here, we can buy again in this level somewhere around 1.072. This is one strategy. Another one here is you can use RSI with moving averages. RSI here, I'm using RSI with 30 and 70. You can use it with 20 and 80 as well. Doesn't matter. You can come here, change it. RSI with 20 levels. We can make it 80 or 20 here. Doesn't matter. You use the 20 or 80. Both of them, they are the same. When the RSI, you can see the RSI number here. This is 68. When it's above 50 level, or you can also, some traders, they're adding here at the level of 50. You're adding the level of 50. Let's make it here like that. You're adding the 50 level here. This 50 level, okay, it will be more visible. Let's make the color, change the color to, let's change the color to green. It's just like, yeah, okay. So we have a 50 level here, 20 and 80 levels. Then we can see the RSI. Look, the price. We have a different signal here. 20 moving average here. The blue one is 20 moving average, and yellow one is 50 moving average. When 20 moving average breaching 50 moving average from down to up, it means that the trend is changed. Trend changed to the uptrend. At the same time, we can see that when the price is increasing, RSI also is getting above 50 levels. So it means that this uptrend has still strong enough strength and enough power to go forward. So when we can buy, when we can buy, this is the signal of uptrend. But the buy level in that strategy, in this strategy, when it's going to least, your buy level is when the price is touching 20 moving average. So 20 moving average, bridging the 50 moving average from down to up. It means that we are in an uptrend. Then we can buy when the price is around 20 moving average. Where is our stop loss? Our stop loss is this level, 50 moving average. Our buy level is here. Our stop loss, when we buy here, our stop loss, for example, if it was 3 days ago, if it was yesterday, our buy level, we could buy here around this level. Stop loss was here. Today, we can buy here, and stop loss for now is here. We can put the trading stop loss as well. Or we can wait and see the market and close it manually when we see that here is getting closer to the 50 period moving average. So 20 moving average is a buy level, 50 period moving average is stop loss. Take profit as depend on your strategy, depend on the K levels. So if you bought yesterday here, it could be the exit 2 days ago. If you bought yesterday here, this is the 20. Now the next level here is here, for example, 24,700 is the exit level. You could buy, for example, at 24,000 and exit at 24. Again, the prices came here, so around this level you can buy again. Your take profit will be 24,700. You can buy at about 24,100, 24,000, 24,200, and so your take profit is here. Your stop loss is 22,000 somewhere here. This is how you can usually do that. So this but the trading, you can put the trading stop loss when the price is going up, when the price is going higher, so you can make it smaller, and also you can use the stop loss levels based on your K level. So you can put the stop loss here also as well. So depend on the 50 period moving average or your K level. You can select your stop loss and take profits. This is the second strategy. And the last one, the third one, is using the OBV indicator with trend line and a moving average, which could be 20 period moving average for day trading. In this strategy, first go to your OBV indicator. With the OBV indicator, you can find this level as a K level, that the price under this level could be, the price is changed to the downtrend. Here is your OBV level. Find this level on the chart. This level on the chart could be here. Look at that. This is the level on the chart, which means 3,980. So under this level, the trend is changed to the downtrend. Also, what you could do, you can also make here, just put your trend line on the chart on the prices. So this is our trend line, and you have 20 period moving average as well. So in the trend line, what you can do here, for your when you want to open the position, when the price is touching 20 period moving average, you can sell. This your sell. This is a downtrend, so you can sell in this level. Your stop loss could be a little bit above this trend line, so your stop loss could be somewhere here. And your take profit, you can find your take profit based on your K levels that you could see. Just like go back, you could find the K levels here, and also based on you can also find your stop loss based on the OBV trend line. When you see that OBV trend line here, when you are using the OBV, when you see the OBV starting, for example, you sold here, OBV came here and starting going up. So here you can take your profit. Or when the price here, look, the price, you sold here and the price is trying to OBV, you can see that OBV trend line is trying to just get a little bit making side movement. So for today, it was, for example, for yesterday and day before that, it was good. But right now, you can see that OBV trend line is getting flat, trying to have a side movement. So for today, it is not a good time for sell. So it means that this price is not a good price for sell. But day before that, here could be the good time for sell. You could get a nice profit out of here. And also when your price started to, when your OBV line started to go up, you could enter the market, you could exit the market as your take profit level. These are three strategies that usually can use in a day tradings. Hope it was useful for you. We have a different kind of trading. We have different strategies as well. Let me know which one of them you liked more and you want more videos about them. Thanks for watching this video, and hope it's going to be, hope that you will have an amazing tradings with these strategies. Bye.